Hi, this is PR Sundar. Welcome to this special episode where I am going to talk about the larger picture of the stock market for the year 2024. So before that, let me tell you one story. In 2019, there was a parliament election. The election results were supposed to be announced on 23rd of May 2019. Exactly 1 week before, I had a conference in Mumbai. That was my first options conclave conference conducted in Mumbai. So in that, while I was talking, so I suggested people, for the month of December, you can do straddle or strangle. And those people who know about me, you know that I tend to trade more in long-term options. And however, I tell people to avoid trading in long-term options in the election year. Because just after the election, markets can move very violently. In fact, in that conference, when I said, the people can do straddle or strangle for the month of December, so one participant asked me, "Sir, look at this television anchor, a business channel anchor. So he says that, don't do options just before the election." And the reason given by him was that in 2004 and after the parliament election, the Nifty fell nearly 30%. And in 2009, after the parliament election, Nifty shot up 20%. So once 30% fall, and next time 20% up, anything can happen. Markets can move violently. So therefore, he advised caution in taking positions ahead of the parliament election. Then I asked the participant, when this television anchor was talking about 2004 and 2009, why he did not talk about 2014? Now let me explain to you. In 2004, just before the parliament election, everybody expected BJP to win the parliament election. But what happened? They lost. It was a negative surprise. So markets reacted violently on the downside. The Nifty has fallen 30%. Of course, I was not in India during that time, so I do not know the exact finer details. Then come to 2009, I was in India. I know everything. Just before the parliament election, the whole country was talking that no party will get majority. It is going to be a hung parliament. That was the message by every media. Then what happened? In 2009, election was over, the vote counting happened, and the Congress could get majority. A Congress coalition could get majority even without the support of a communist. Because the communists had some differences of opinion with Congress with respect to this nuclear deal. So that was a positive surprise, right? One can say in 2004, BJP lost when Nifty fell 30%. In 2009 also BJP lost, so also it should fall 30%. No, it shot up 20%. So the reason is that in 2004, everybody expected BJP to win, but they lost. It was a negative surprise. In 2009, nobody expected BJP to win. Everybody expected hung parliament. But then Congress coalition won. So though it was considered as a positive surprise. But what happened in 2014? Everybody expected BJP to win and they won it. So there is no surprise. That is why in 2014, markets did not react violently. How violently it reacted in 2004, how violently it reacted in 2009, but it did not react that violently in 2014. Then I said in 2019 also, everybody is expecting BJP to win and BJP is going to win. So therefore, you can take position. So then the participant asked me, "Sir, number one, how can you be so sure 100% that BJP will win?" Because the previous few months, there was a 5 state elections. In all the 5 state elections, BJP lost. That's number one thing. Second thing, you always say, Mr. Sundar, markets will react violently for the surprise news. So who knows? There can be some surprise. Maybe BJP losing may be a surprise. A hung parliament may be a surprise. Any number of surprises can happen. Then I replied to him, if you want to take position ahead of the parliament election, so one important thing you have to watch. What happened in 2009? Everybody expected hung parliament. Markets were bearish, especially after the Lehman Brothers collapse. Markets have fallen already. Markets were bearish. And after the election, vote counting happened on a holiday. I think it was on a Saturday. So on Saturday, vote counting happened. Saturday evening, the results were out. And it was a positive surprise. And Monday morning, SGX Nifty opens 20% higher. So here market open around 10 o'clock. That time your markets open 10 o'clock. Naturally 10% upper circuit, market will be closed. Because when Singapore Nifty indicating 20%, who will want to sell here at 10%? So 1 or 2 seconds trade happened at 10% upper circuit. Then market closed. Again after 1 hour gap, again open another 10%. For the whole day the market was closed. But in 2009, number one, I expected BJP to win. Number two, okay, I may be wrong. Things can go wrong. But the vote counting was on 23rd of May 2019, which was a Thursday, which was a working day. So in a working day, if you have a position, you keep watching the trend. So if things go wrong, you can always maintain a stop loss and you can come out. The problem will come if the vote counting happen on Saturday or Sunday. If there is a positive surprise 10-20% gap up, negative surprise 10-20% gap down, you cannot do anything. So this was the reason I have given. I think the participant was convinced more or less, and then he took position and he made a very good money. This year everybody knows I am under SEBI ban. That's a blessing in disguise. Markets have been too volatile for the past few months, so I am not trading, so I am not losing. And ahead of the parliament also, this time I will wait for one event. I will wait for Election Commission to announce the dates of election. You wait for the dates. You don't see when is the election. You see when is the vote counting. If the vote counting happens on Saturday or Sunday or any other public holiday, better be away from the market. Anything can happen. In case if it is happening on a weekday or working day, then you may consider taking some positions. Because on that particular day, although right now everybody is expecting BJP to win, but as I told you, anything can happen. So, you can take position so that you can maintain a stop loss. So, this is for taking the position. But now, what is my view of the market? If you can remember last week I came out with a video saying that there is a froth in mid-cap and small cap. Okay, especially. So, I said even in large cap also you want to invest, you look for stocks that has already fallen 20-25%, good quality stocks from the recent high. But today, this video is being shot on 28th of February. And today, there was a news that SEBI has directed AMFI. There is a froth in mid-cap and small-cap stocks. And so, the inflow to the mid-cap and small-cap mutual funds should be moderated. So, in fact, I told you, many fund managers were refusing to take the money. So, this was actually going on for some time. Okay, from now to December, it means after the parliament election. Number one, what is the expectation? Expectation is that BJP will win. So, if BJP win, then there is no surprise. Everybody expects BJP to win. If the BJP win, there is no surprise. What happened in 2014? What happened in 2019? Same thing will happen in 2024. And in fact, from last October to this February, the Nifty has already shot up from 19,000 to 22,000 with this expectation only. So the BJP's win is already been factored in. Of course, it is not 100% factored in, but more or less it is factored in. So therefore, even if BJP wins, markets are not likely to go very much higher. But for one or the other reason, if BJP loses, then what happened in 2004 can happen now. Markets can tank 20% to 30%. So if you look carefully, your upside is very, very limited, but downside is unlimited. So that is the situation right now. So is this the right time to buy the stocks? So I'm leaving it to you. So you decide. On the other hand, there are many people talking in favor of the bulls. One of my friends told me, right now, this year, Nifty earnings per share is about 975. Right now, markets are trading at 22 PE ratio. So for the next financial year, the people are expecting at least 1,100 to 1,150 earnings per share. So extrapolating that, Nifty has the potential to go to 24,000. But even if Nifty goes to 24,000, it is less than 10% of what it is trading from now. Right now trading around 22,000. So 24,000 is only about 10%. But it's not that just after the election, in one day it's going to shoot at 10%. So once elections are over, uncertainty is over, markets may be 2-3% higher, but still it's worth buying there to capture the remaining 6-7% rather than taking a position before the parliament election. And in case if BJP loses, 20-30% market can crash, right? So this is one thing. And although all these parameters, the change is the only constant, right? Right now, earnings per share is 975. Next year is 1,100. It can be plus or minus 50. Second thing is that right now, if it is trading at 22 PE ratio, there is no guarantee that it has to trade at 22 PE ratio. It can go to 25 PE ratio also. It can go to 18 PE ratio also. So there are a lot of moving parts here. Okay. So simply speaking, I'm just advising only two things. Number one, okay, this is definitely not the right time to invest in stocks. Of course, if you are doing SIP, it's a different thing. You continue your SIP, but do not start your SIP now. It's not the right time to start the SIP now. That's number one. Lump sum amount, if you want to invest, better wait for the parliament election to be over, or at least, okay, let the election commission announce the dates. And if you are a trader, it is better to wait to know when is the election vote counting day, and if that is a working day, then you may start taking some positions, right? But my bull case scenario is that Nifty is likely to touch 24,000. Looks very big, but it's only 7-8% from the current market price, right? But the downside is very, very high. One may ask one question, sir, you are saying that don't invest now, but what if I have already invested? So if you have already invested, so make sure that during the election time, so you do the hedging for your portfolio properly, right? And then you ride that event risk. So all over the world, markets moved violently after the parliament elections. So that is the message right now I'm giving. So once again, I repeat, the risk reward is not really favorable to the bulls at this point of time. And then what I said is what is said by the SEBI also. But SEBI said in case of small cap and mid caps, the froth is there. So that's why the AMFI sent a circular to the mutual fund houses. So that's why today the markets fell. So the froth is definitely there in mid cap and small cap, but large cap, I don't think that there is any froth, but still it is not the risk worth taking right now. So once the election commission announces the dates, then I may come out with some video giving you some sample trades also. Hope you enjoyed watching this video. Thank you for watching.